There's a quote. The deceleration in growth coupled with continued regulatory scrutiny, and this is where it gets good, is a toxic brew for any stock and could have impact here too. What do we think?
I think we're going to know more about this in the next couple of days, certainly as they stand before D.C. policymakers. But I also think a lot of these calls sometimes are mistaken in the sense that basically they don't say, I think what a lot of us on this desk have said, is Facebook's not going anywhere. It's basically valued at where it is, and it's probably going to be.
You're talking about the stock's not going anywhere?
The stock itself. I
don't
want
stocks in the penalty box?
I don't want to use the term penalty box because I think it could sustain itself right here at 170, 175. It dips 160, 155. It's probably a buy down there.
Oh,
it just means, again, I go back and I use the term momentum. Stocks lose momentum. They don't get momentum back for an extended period of time. And I think this is a stock that's going to move sideways before it develops a downtrend or an uptrend.
Well, I think that's right. I'm sorry, I'll just make this quick. I think that's right. I'll tell you what worries me more, and I'm sorry, Judge, I'm answering the question I want to answer, but in the same boat is Google. Is Google. You can't ignore this. I'm sorry, I said this Friday. This is important. You look at Google, it has been at best flat over the last 2-3 months, while Amazon, Apple, and several others have rallied hard. This is an $850 billion market cap stock. This thing needs to perform like Facebook, okay, just to tie it together. This was a market leader until quite recently. It worries me that a couple of market leaders have fallen off of the leaderboard.
But fundamentals at Google were good. The quarter was outstanding. Numbers were going higher after the print. I just think it was a little bit more crowded, to be honest with you. I actually think Facebook is the least now it's the most hated, rather, of the FANG stocks. I don't think anything in this note today was new. Nothing. The stock is already corrected big time, and the company is still going to be able to post 30% growth, trades at 19 times earnings. We know margins are going in the mid-30s.
Yeah, but I mean,
we get it.
What's new is, I mean, they are, admittedly, they're taking numbers to a place that they never thought they'd be taking them.
Well, if you read the note, actually, it said that they wanted to downgrade. They were thinking about this in back in December. And you know what? Good for them that they held on.
I did read the
right?
note. I did read the note.
No, I'm not saying you didn't read the note. I'm just saying that for those that haven't gotten the note, it said that they wanted to downgrade it in December. They let it run, and it did have a nice run. It would have been better had they downgraded it before the quarter and not after this pullback. And
look, maybe they're trying to get ahead of tomorrow.
I didn't read the note. They didn't downgrade it at 215, so they downgraded in the 170s. Listen, this is a relatively straightforward risk reward from my view. You do not want to be long this name for a trade unless it can get back where it failed, trying to get into that post-earnings gap. That's about 188, call it 190 if you'd like. If you can see it get above that level where it failed, it tells you that buyers have come in where before they have not.
What if there's an
well, hold on, and maybe the sentiment is shifting. Your downside here, I think, is 150. So if you think about a risk reward, 20 points down, potentially unlimited to the upside, but stay out while it's in this no man's land. It's in this very gappy, choppy place, and there really isn't any idea about when the buyers will come in with enough convincing strength that tells you that Facebook's trials are over.